So this is the first trade. This trade, price traded above the current new week opening gap. That's my catalyst for longing. A continuation move. We're deep in premium, I know it, but I'm looking for a continuation since we have traded above the new week opening gap. As we're trading down to its constant encouragement for a retest, I was longing. I expect price to stay at the upper half, maximum to trade to the candle. I don't want to trade to the candle one of this 5 minute fair value gap. That's where my stop loss is at, and I'm longing, looking for higher prices at, with the 10 minutes at 1.5 standard deviation of that leg down, the retracement before this rally above new week opening gap. At the same time, I'm targeting regular trading IFs buy side liquidity pools. You can see them to the left of the screen. I'm taking them onto the right of the screen now, and you can see buy side liquidity pools outlined there. I'm looking for longs to that level. In a short while, I'm going to add 2 contracts to this position. This is a voiceover, by the way. I'll add 2 contracts to that position when price trades above this current CB. The CB is in orange. I label it as an IFVG because I'm expected it to be inverted. And when it's inverted, I'll add 2 contracts on the retest of it, and I'm aiming for buy side. Alright, so now I'm in 2 contracts, and price is trading well at this point, but I don't want to see trade to the inverted fair value gap towards the low. I see that happen right now. Price trades to the low of the inverted fair value gap. That is not what I want to see. That's bearish, or it shows high risk and liquidity run conditions. So I'm looking at this very skeptically, and as a winning trader, you have to be able to cut losses short and see where price is not going to deliver your objectives and start exiting the positions so you don't take large losses. The 1% succeed because they have very big winners. They take the losses up and they cut the losses short. So I just cut off 4 contracts right there, and I still see very poor price action. No displacements higher. Displacement suspension block. So I have my fingers on the trigger. I took 1 contract up there, and the rest hit stop loss. On that trade, I just risked 0.6%. This new trade, this is the second trade for the day. I'm coming in with half risk. I'm risking 0.25%. Buying just 2 contracts, and I'm willing to pyramid if I see low risk and liquidity run conditions. I'm buying the breaker, retest on the breaker, which is also the high of the 5 minute fair value gap. And I'm doing that because I saw price reject the 15-minute fair value gap to your left, and I was looking for higher prices. I'm still long 2 contracts, and I see a retracement coming down. I'm going to add 2 contracts. So right there on the retracement, I go long with 2 contracts, and I'm long 4 contracts, aiming for regular trading highs. And you have to know this is impeccable risk management. I see bearish displacements. I don't want to see this if we're having low risk and liquidity run conditions. So I'm already contemplating, again, removing risk. I'm contemplating cutting my losses short if I'm going to be out of this trade. At this point, I'm still in, and then I see, after adding those 2 contracts, it's worthy to note that I reduced my stop loss to break even, or to the point in which I entered the market. But they averaged me to where you can see it there. I'm going to see higher prices, speed above those highs. That'll be bullish, and that was to move to the target. The time is 12 p.m. and we're in the macro. I want to see price expand to that macro. Unfortunately, that's not exactly what happens. Price forms this balanced price range, hits its low, and is still digging deep into it. We see price trade lower, and it's about to take that short-term low. That is extremely poor, and I take 2 contracts off. That's not what I want to see. I trade the stop tight, expecting to see higher prices or get stopped out, and eventually I get stopped out. But not before it rallies again. This is a high risk and liquidity run condition, so we see ups and downs. And you see that's a very big up. I think the algorithm will spool up to, because of that momentum, to spool up to the target. So I add 2 contracts back on, and I'm giving it a chance to see if it's going to find support at this balanced price range. However, I'm trailing stops very tight because I know this is high result liquidity run conditions. So my risk is extremely small, just 21 ticks. And once again, order flow is not giving, is creating a barcode, consolidating,